step index on a 4 hour. At the 25% quadrant level, I have this favorable gap with this bearish order block, and I want to see price action remain heavy on the downside. Use that 25% as a resistance. We're looking at step index on a 4 hour time frame, and it's a blank chart. Obviously, does this imply that we have a high probability in the market? Looking at this structure, is there high probability trade conditions? Obviously not, because price is consolidating at the moment and it's not looking nice, honestly. But in this difficult market condition, I can provide you with insight as to what I was seeing in that little vignette that I just showed you in the beginning. I was essentially looking at this particular favorable gap, and this particular favorable gap is, well, congested with another key level from the daily time frame. So before I relay, or before I show you what this favorable gap is close to, we would first need to understand where price has been. If I'm looking at a key level on a 4-hour time frame, a smaller time frame, I have to use that smaller time frame key level with the higher time frame. Otherwise, that small time frame would be invalid really quickly. So I mainly use small time frame key levels based off of what I was provided with in the higher time frames. So these are the annotations for our video here with the support and resistance ideas. We are seeing that the fair value gap in here has a 25% key level from the daily time frame. If you do not understand where to get this particular fair value gap, you draw it from the daily time frame. Do follow along with the June commentary so that you understand what these key levels are being represented as. I spoke about power of 3 in June commentary, where I stated how we short above a new weekly candlestick, and if we want to be bullish, we buy below the opening price or near it. So in this case, I am talking about the new week opening for the week that we are currently trading in. As we see the opening on Sunday, Monday and Tuesday were bullish, filling in the daily time frame new week fair value gap high. So since we had begun a new trading month for July, I showed you price action for Wednesdays as it created high of the week. So since the opening, this is the weekly candlestick. We have the new week opening. We traded up Monday, Tuesday, went in to fill in the daily fair value gap high. And we had since displayed lower, creating a market structure shift below the 25%. We then came up into our 4-hour time frame fair value gap in the consequent encroachment of the daily time frame. So price being respected on the 50% consequent enroachment and providing us with a structure like a fair value gap inefficiency, price is respecting both key levels because they are high probability trade conditions. Your support is now being used as a resistance. The same idea that we can use is the 25%, showing you a fair value gap on the 4-hour time frame. As long as our fair value gaps are above the new week opening, so shorting above the new week opening, if we are anticipating that price action is going to go lower, opening going higher and printing high of the week for Wednesday in the CB daily time frame, I've noted this as a key level, and we respect the key level. We sweep the buy side liquidity pool, and we displace lower, printing our market structure shift. Another fair value gap down here, just below the new week opening price, we printed this particular relative equal lows. And we then came up to fill in the fair value gap itself, respecting, of course, the key level from the higher time frame, 25%. I love how we are closing below the new week fair value gap low. That would be a bit bearish for me if price remains heavy below this particular low. So I would be anticipating that price is going to attack the external range liquidity because these key levels are close to each other. If you're looking at this as your, trend line support, diagonal support, you're going to be met with a huge surprise as price is coming down here to clear out any liquidity that would be resting in these particular lows here and this one. So we are coming down to offset liquidity pools. Okay, we are bearish for July's price action as well. I have been denoting these key levels from the daily time frames and transposing them into lower time frames, and we see the precision of these key support and resistance. Okay, this is what I teach: precision. All right, so as long as we are shorting above the new week opening price using our key structures from the daily time frame, you can either use the key themselves or the inefficiencies or your bearish order blocks. Everything that you find above the new week opening price for a short will be valid and will be highly recommended. A fair value gap below the new week opening price is low probability. So it's reacting off of the new week fair value gap low, and we're anticipating price going lower into the external range liquidity. And we should have a new week closure, maybe somewhere down here.